And with all the anxiety in the U.S. markets and volatility here in Asia, let's bring in Francis Tan. He's Chief Strategist Asia at Indosuez Wealth Management. So, Francis, we're still watching, the recession fears in the U.S. and how that's affecting Asia markets here. So we can understand and imagine the potential economic effects of tariffs in Asia. Which markets do you think are more susceptible to the volatility this time around in this part of the world?
Well, I would say that this part of the world right now will be markets that are much more susceptible to Donald Trump's tariff fears, right? And that will again be, of course, Asia. Asia will be China. Because at the end of the day, China is the largest exporting country into the US. So the US will definitely be hitting hard on China, especially the export industry, the manufacturing sector. So companies in the Chinese area that's linked to such will be impacted. But as to your earlier question about the volatility, I think the volatility in the US will be even larger than in this part of the world. The main reason is because of valuations differential. I mean, over in China or even in most of the other Asian markets, the valuations are not as high or expensive. But in the US, we have come a long way since post-COVID. They have driven up the valuation of companies to the level right now. I mean, as a gauge, the S&P 500 before this current couple of days of a sell-off was hitting its 2 standard deviation high. And that at that area, of course, it's always impossible to know when the sell-off will be. But it takes a very prudent financial advisor or asset manager to start lightening up on the portfolio, especially if any client's portfolio is allocated too strongly or too heavily into the US, including the US tech space.
Yeah, so does that mean that any weakness in the U.S. markets, even the U.S. economy, now with questions over U.S. exceptionalism, will strengthen the case for Asia and China? Will money flow out more from the U.S. into this part of the world?
Yes, of course, in the long run, the US market, stock market being the deepest and the most liquid in the world, will see a very strong push upside on the secular trend. I mean, companies listed in the US are global champions. They are not just US champions or regional champions, they are global champions. The kind of companies that are over there providing the kind of goods and services are what we consume in the rest of the world as well. So long term, I'm always positive on US equities, US companies. But near term, there's always cyclicality. And the cyclicality is driven by how valuations have moved away from fundamentals. And right now, like I mentioned just now, we're seeing valuations really moving quite strongly away from the fundamentals. And certainly at such times, there will be investors taking profits and starting to take profits and selling off. So we do see that in the near term, there will be the sell-off may continue in the US. For how long, it's hard to know, but until it reaches its deemed fair value. And when that happens, fund managers around the world are looking for an alternative. And the alternative has brought them to Asia, in fact, to China, whereby the relative differential in the valuation provides a much more compelling reason for them to seek out some of the big techs, some of the big names in China.
Yeah, so that's the valuation perspective. What about in terms of growth, in terms of catalysts for any upside? Where will that come from when it comes to China?
Indeed, the lack of catalysts over the last 2 to 3 years, mainly after how the Chinese government has been clamping down on a couple of sectors in China, including the real estate sector, has caused a much low sentiments, pessimism in China. At the end of the day, to indeed push up aggregate demand of a nation that drives GDP growth, including the business investments and consumption, you have to boost up confidence first. Now, if you and me, if you are a corporate, I'm a household, if our confidence start to move higher, then I think we will start to consume, you will start to invest. And when you start to invest, you increase your business operations. I will say that, okay, it's time. I think I'm more confident about the future. I will start to consume more. And my consumption is your next periods of revenue, right? So for now, I would say that the key catalyst in China is not just the corporates, it's not just the households, but government. And from the National People's Congress, they provided a very strong and clear signal, not just to Chinese communities, but also to the rest of the world. They are finally going to do so. And the 4% of GDP budget deficit that the Chinese policymakers are gunning for this year, I think that is the largest that we have ever seen in the last 3 decades. And that will be a strong push and signal to drive up this round of strong consumption and investments by onshore companies. And this will help them hopefully buffer against any potential tariff fears that's going to come up from the U.S.
Yeah, so investors are still watching the tariff rhetoric closely. And the markets could be susceptible to any changes on that front. But we saw today no exceptions for Australia on steel and aluminium exports. And we also saw that, that these tariffs could also impact Japan, South Korea, and these are traditional allies of the U.S. So how then do you take the rhetoric that comes from the Trump administration?
Well, certainly, if we look at the mindset of the Trump administration, these are very quick, low-hanging fruits, stopgap measures, and quick wins for the Trump administration, especially during elections last year. He's going to say that I'm going to go after anyone who the U.S. imports a lot from and whom we have a huge current account deficit against or trade balance deficit against. So these are perhaps a quick wins for him and expected to come anyway. So market calls this uncertainty, but to me it is a certainty. There's no uncertainty around that. That's Trump, what he said he wanted to do. But I think we need to look in the longer term that at the end of the day, look at how China has evolved. I mean, Trump, when he was president first time 8 years ago, he started tariffing Chinese exports. But what was the outcome? The outcome was a much stronger China. The outcome was a lot more innovation in technology from China in order to move away or to reorganize their entire trade structure with the rest of the world away and decoupling from the US. So likewise, South Korean or the other major steel aluminum producers will probably as well use this period to look out for which are the other potential clients or customers that we can serve.
Yeah, so it's going to be a regrouping, I guess, of trade. Francis, appreciate your insights today. Francis Tan there, Chief Strategist for Asia at Indosuez Wealth Management.